Well, I think we've had two false starts, first with Gilead and then with Moderna. And I think as an investor, if you're trading on the possibility of a near-term vaccine, it's going to be very difficult. And I also think a phase of realism is starting to overshadow the markets. The economic data is very, very shocking. And we're not even, we're just halfway through Q2. I think the numbers in Q3 are going to be very, very challenging. I think Trump is being overly optimistic at the bounce back because the reopening of the U.S. economy, or here in Europe, the European economies is not going to be quick. I can see that here on the ground. I'm in Portugal. Things started to open 10 days ago, but it's a fraction of what it would normally be, and on a given weekday. It's probably at a 20th of the capacity.
Christopher, I know that you've been somewhat optimistic the whole way along, but as you now talk about this long shadow of debt that will overhang economies, that just causes a note of caution, I think, for a lot of investors, because what we've had, a $2 trillion deficit jump in the United States. Here in Europe, as we talk about funding the European budget, there's talk of more taxes. Where is this all going to come from? If we don't get a strong bounce, if there's no V-shaped recovery, then clearly we're going to be looking at a world of more taxes and an overhang of debt.
I think that's absolutely right. At the moment, the marginal buyer or the only buyer in the system are the central banks themselves. So effectively, that means they're printing money because the demand from retail investors to subscribe to retail fixed income funds yielding 0%. It's just not there. So I think ultimately there will be a day, and I don't know when this day is, that everyone realizes that full faith in credit in the U.S. in the U.S. dollar isn't at 100 cents on the dollar. It's got to be less than that. And I think longer term that will be repeated, whether it be in the UK or in in the eurozone. They're effectively printing money to support not so much the bond market, but the actual funding requirements. So it's trust that investors are now believing in. But I think as we get down the road, that trust will wane, and I think that'll spell real hardship in debt capital markets, further out the road. And I thought it was interesting that the U.S. is now lengthening the maturity of its debt by coming with the first 20-year U.S. Treasury since 1986. This is really putting a burden on the next generation, or maybe the generation after that.